this is really important. We also think that AI is highly deflationary in the good sense, but it will cause a boom in activity associated with artificial intelligence.
In today's video, ARK CIO, Cathie Wood, weighs in on inventory pileups, liability-driven investing, commodity prices, and why she believes that the Fed is making a mistake as they base policy on lagging economic indicators. Wood discusses fiscal policy, monetary policy, market signals, economic indicators, and innovation.
We've owned NVIDIA since inception. Some of our funds still own it. Our ARKQ fund and ARKW. In ARKQ, it's number 7. In Japan, we have 3 funds that own it. We have our Metaverse Fund, our Mobility as a Service Fund, and our Global Digitalization Fund. So they still own it. And as you know from our ETFs, we have taken profits. This stock has gone from $5 when we first bought it to $400. There's a lot of good news discounted in this stock, and we still think it will do well over time. However, there's a new group of stocks that are going to benefit from the foundation that NVIDIA has laid. NVIDIA is a hardware stock, and sure, it has some software, but the history of hardware and software is the bigger beneficiary over time is going to be software. And in our view, for every dollar of hardware that NVIDIA sells, software providers, SaaS providers, will generate $8 in revenue. So we are looking to the software providers who are actually right now where NVIDIA was when we first bought it. So NVIDIA was in the $5 to $10 billion range. Now it's $1 trillion, as you said. But we have software opportunities out there like UiPath in the robotics process automation space, Twilio. In the genomic space, we have Exact Sciences, Teladoc. We have companies that are, because of artificial intelligence, they are going to develop new businesses that we think are going to thrive. And right now, they are in that $10 to $12 billion range that was in place when we first bought NVIDIA. So we are really happy that investors who own benchmarks like the NASDAQ and QQQ still own NVIDIA. They own it in some of our portfolios, but we're on to the next thing.
Where do you see the market going?
Well, we think this is a very large market, and we believe right now the hardware side of it is probably in the $30–40 billion range. So multiply that by 8, we see the software side going to 8 times that. But over the next, between now and 2030, we think artificial intelligence is going to add more value than any of our other technology platforms. In fact, it's going to catalyze them. We talk about Tesla all the time. It actually is the biggest artificial intelligence play, we believe, right now in our portfolios. It is the largest position in our flagship portfolio, ARKK. Why is this? Because autonomous taxi platforms, we believe globally, will deliver by 2030, $8 to $10 trillion in revenue from almost zero right now. Think about that. $8 to $10 trillion in revenue is almost half of the size of the US economy. We think that's a global autonomous taxi platform opportunity, and we think it's going to submit to natural geographic monopolies. Tesla certainly in the United States and perhaps elsewhere. So you're going to be surprised at seeing who's going to, many people think it's just hardware and software stocks widely advertised, but Tesla, many people think is an auto stock. We don't. We think it's much more than that. But we think it's one of the biggest AI opportunities out there.
And you don't think the valuation for Tesla is too high right now? What would prompt you to sell?
Well, right now, and we're in print on this, Tesla's at roughly $200. We believe that in 5 years, 2027, it will be a $2,000 stock if our research is correct. Importantly, autonomous technology takes it there. If we're not right on autonomous, we still think that Tesla meets our 15% compound annual rate of return hurdle requirement, which means it would be at least a $400 stock just because of the massive shift towards electric vehicles during the next 5 years.
Of course, we know that Elon Musk has been meeting with the top leadership in China. What do you make of that visit, and how important is this market?
Well, you know, Elon has always said he has been so impressed by the political leaders in China. He goes into the cities, and the mayors of cities very often are engineers, and they know exactly what he's talking about. So I think he thinks China is very fertile ground to become an exporter of Tesla vehicles, as it already is. So that's very high-end exports, which China wants. Of course, it wants EVs to proliferate in China, but it's got its flagship BYD and many other companies. The other reason I think Elon is there is maybe it's a little bit of a peace mission, because as I believe, as my friend and mentor Art Laffer believes, and as I think Elon believes, we're all better if we are communicating and sharing technologies and making one another's economies even better than they are now. So I think it's a little bit of that peace mission as well.
What are your thoughts on this when investors say, should they invest into AI, or should they just go with a standard generic NASDAQ 100 index?
Well, we do think AI is going to be very fertile ground. We do have to pick. You do have to pick your spots. You know, we're in a moment now where you're seeing a lot of companies slap an AI into their names, and this is where active management really is important. We think that there will be very many successors, but the most important, successful companies, but the most important ones we think are going to have visionary management. I mentioned Tesla as an example. Visionary management, AI and domain expertise, that should be a given. But perhaps the most important after those is large pools of high quality data that no one else has. So proprietary data. We mentioned with Tesla, it has billions upon billions of miles of real world driving data, so that it is evolving a system that will help people get from point A to point B in the quickest way and the safest way. That's really important, the safest way possible. And, you know, we can look into whether it's our genomics names with Exact Sciences and Teladoc. Genomics, I call them multiomics as well. They have data that no one else has. Twilio has data in terms of the interactions between businesses and consumers that no one else has. Zoom is going to be announcing new products, I think, in early June, showcasing some of its AI products based on data. UiPath, again, in the robotics process automation space. This is a company that is advising companies now with their own large language models, advising them, how do we make you more productive over time with new business processes? We believe that, right now, our estimate is that there are $32 trillion globally paid to knowledge workers, and that is where we're going to see a lot of productivity gains. We may see displacement of some workers, but we actually believe that technology is a net job creator, and that those people will go on to better jobs. Well, I have known for many years. In fact, I sat on a panel at the World Economic Forum it was either 2017 or 18, with the Minister of Innovation from China. China has had innovation as one of its priorities for a very long time. And we think that's the right thing to do. We know that common prosperity suggests to us two things. One, maybe profitability is not going to be as much rewarded in China, but the vast market in terms of, tier 2, tier 3, 4, and other tier cities will open up innovation and make many people's lives much better. So we think what you give up in margin, you might get in scale in China. But we do think it's very important that companies understand when they move into China, if they want that scale opportunity, they'll probably have to give up on margin in keeping with common prosperity.
Exactly. Do you expect technology and AI to evolve as fast in China as in the West, given, of course, some of the restrictions around in the country?
I think this might be one reason Elon Musk and others are there. They don't want to shut the country down, or they don't want China to be isolated, that the give and take has helped us for the last 20 to 25 years. So we're hoping that the restrictions do not impede innovation. I don't think that at the end of the day that the Xi Jinping administration wants isolationism to limit innovation. My experience in China and talking to people from China is they want to encourage innovation, but they want to make sure that it presents access, gives access to as many people as possible in the country.
For how long will the promise around tech, around artificial intelligence, be able to offset the reality of higher interest rates, also the pressure on the broader economy?
Yeah, as we always say, innovation solves problems, and AI, we believe, is going to cause a productivity boom. So to the extent that companies who are having to pay higher interest rates on their increasing debt need to find ways to save costs, they're going to look for technology to help solve their problems. And we think it will. And we also think, this is really important, we also think that AI is highly deflationary in the good sense. AI training costs are dropping 70% per year. That's massive deflation taking place, but it will cause a boom in activity associated with artificial intelligence. So we believe that companies are going to adopt it. We think that ChatGPT was that moment, and we're thrilled that it happened because finally people are looking at the promise of innovation instead of, over the last 2 years, worried about companies investing in innovation. So we think this is going to be a win-win. And by the way, if we're right on the deflationary ramifications of innovation here, then interest rates are going to come down, which will be a double benefit for innovation-based strategies.